We're focused on separating the signal from the noise as the outlook evolves. It can be the case that it's appropriate sometimes to look through inflation if it's going to go away quickly without action by us, if it's transitory. And that can be the case in the case of tariff inflation. Let me say that it is going to be very difficult to have a precise assessment of how much of inflation is coming from tariffs and from other, and that's already the case. Some of it, the answer is clearly some of it, a good part of it is coming from tariffs. I do think with the arrival of the tariff inflation, further progress may be delayed. The SEP doesn't really show further downward progress on inflation this year, and that's really due to the tariffs coming in. All forecasters have tariff inflation affecting core PCE inflation, core CPI inflation this year, without exception. In terms of the balance sheet, the committee came around to the view that we would do the same thing we'd already done. We lowered the pace of QT, and we're just going to do that again. We're going to cut it roughly in half. And the sense of that is, if you're cutting the pace of QT roughly in half, then the runway is probably doubled. It's going to be slower for longer. It's like a plane. You can think of it like a plane coming in for a landing.